Here we go. Stocks by the numbers. Welcome back. And I wanted to do a quick market review of the three major indices. And I wanted to look at two names in particular, just a couple of things to look at. And obviously, first thing I want to look at is the S&P. And we can see we were kind of climbing a little bit. We had a big drop here, and we ended up closing right at that trend line right there, which again is why I love my trend lines. But technically, we did get up and close above the trend line, so I'm curious to see if we do have a bounce, maybe back to this fib. Again, this is a one-year chart, I believe. Yeah, so we could potentially maybe get back to here, 54.65, around that level, maybe meet up with the 20-day, 5,500. That could potentially happen tomorrow if markets want to bounce back. In my opinion, I do think we overall remain kind of in this downtrend. So I spoke, I think it was a day or two ago, about the potential climb back to the moving average and this resistance level up here. And now, of course, today we had some big red, so that's on hold right now. But again, you could have a bounce, or of course, we could potentially have a break. I personally believe we should break, but we know anything can happen. You know, one announcement, Trump says something or tweets something, and the markets explode. But also, anyone out there who is, yelling from a mountaintop about market manipulation, obviously, I just want to remind you about Nancy Pelosi outperforming Warren Buffett for the last several years, and no one said anything. So, fair is fair, right? But we have the 10-year and the 20-year yields began to climb throughout the second half of the day. And that, in my opinion, not only was it what I predicted, but also as these yields climb, usually these stocks continue to slip down, right? And I know you have to keep an eye on the dollar as well, because we know in theory the dollar goes down, stocks can go up. So I know there's a lot of indicators to keep an eye on, but just wanted to point out that look at that 10-year up almost 2.5%, 20-year up 2.65% right now, on its way to 5% overall. And in my opinion, I do believe that the 10-year could probably easily get up to about 5.25%. So I'm curious to see if it continues to climb. And the 20-year, I mean, that would be 5.5 to potentially like 5.7, 5.8. So we'll see how that plays out, but again, just like to always mention the yields, and you guys know I always like to keep you updated on the dollar when I can. So, in my opinion, I do think it still stays rough and rocky before it gets better. But we knew this. Again, even Trump said this himself. He said, listen, I'm going to do a bunch of, policy changes where there's going to be a bunch of tariffs, there's going to be a bunch of news, and, it's going to get rough before it gets better, but technically it should work out, right? I'm trying to do some good things here. But if we switch over here to the NASDAQ, we can see that, again, we ran up right to the moving average. We mentioned this, I think, the other day, and then we had the rejection come down, and you can see we broke this fib here of about 18,200 and ended up coming back a little bit, 18,343. So we're technically above the fib, but we did, again, just have the rejection off of the moving average. So what that tells me is now, like overnight, going into futures pre-market and market open, we would need some sort of positive news to come in to force us back up to the moving average or potentially touch this resistance trend line here, which is why I think that, again, we kind of channeled up and now we're breaking potentially down again. That's why I think 17K, again, I know we recently touched that, but we really should come back down to this trend line and continue to drop down, but we'll see what happens, obviously. And the Dow, again, we rose right up basically to the trend line, closed right there, and we can see that we dropped today. Let me zoom in a little bit, see how we dropped essentially right down to that bottom trend line there, had a little bit of a bounce, ended up closing above this fib right here, 39,449. We're at 39,593. Markets, let's see, throughout the day here, yeah. Markets were straight down essentially to about 12:30, and then we caught a little bit of a bounce. We started to even out, and then it looked like we actually began to sell back off in the afternoon. I mean, you had some buying going into tomorrow, so those traders potentially stepped in. You can see about 345 at the bottom, right? So they stepped in the last 10, 15 minutes, and they took whatever trades they wanted to going into tomorrow. And again, I hate to be pessimistic, but technically we really should continue to drop down and sell off. DXY back down below 101. And you can see it actually technically just broke this trend line here. Look at that, going back from that low end of May 21, coming up, touching that low right there, end of September 24. And you can see we recently came down and broke below it. But again, it's all kind of moving together, if you will. Even as the dollar was going down on recent news, I thought also that silver... See, I thought also that silver should be up, and you can see, obviously, we tanked down and we had a little bit of a rebound, but look at how it stayed steady and even dropped down even further, and then took a while to even get back up to where it was before the drop, right? But gold's up 3%. So, you know, a situation like that, of course, I understand it's all hindsight, but, you know, if we have this kind of situation playing out in our politics, and now you probably could tell that gold and silver would be worth more. Than any time you'd have a dip, you'd want to step in and you'd want to buy that dip as a trader. But believe me, I understand it's all hindsight. Switching over to oil real quick, I'll get to the stocks. Switching over to oil, we can see again, we were kind of speaking about this downward channel. We were bouncing around that key level of 67.5. Look above it to the moving average, back down, boom, right back above it, and then we climbed up. Hit about 72.25 right here on this fib, and that's when we started to really chunk down. And you can see how it's funny with the bounces even, it's inside this downward channel that it was originally in, right? So we had a little premature breakup here as we got above that trend line. That's why I said something. So this trade right here worked out well, and now we drop back down into the channel. So now we have to see if we stay above this fib and break up and out back above this trend line here. I know it's a lot to keep an eye on, but you have to see if we break up and out, and then we could retest 67.5. So you might be able to trade USO calls real quick. Or if we continue to stay in this channel, then you can play USO puts, potentially a couple of weeks or a month or two out. But again, we kind of have to take it day by day. We know Trump is the wild card, right? And we know, especially now with social media, things like Twitter, and he's got his Truth Social, and millions of people are following him. So we know, Elon as well, right? We know that any little statement, any little announcement, boom, all of a sudden markets explode, all of a sudden markets start selling off. So I understand it could be very volatile right now in this environment. So you just have to take it day by day. And again, as I say, just try to remember the rules of investing, right? Don't be too heavily invested into any one given position. Always try to keep some cash on hand, right? Remember the rules. But let's get into the stock. So I wanted to talk about MBOT, and I wanted to talk about Disney very quickly. MBOT, I just want to show you, we were up today 8.5% while markets pulled back big, hit $1.94 and pulled back here essentially right to that fib right there. You can see down a penny after hours, and we had the big pop right after the ball dropped. As I said, I kind of predicted it was going to have a good year, and it literally happened as the year started. But MBOT still technically up a very, very nice chunk from around the dollar levels when it was first brought to you here on this channel. And even though we popped up, we're above this initial trend line that we looked at last time, the resistance level. And if you want to go from like here, you can see, we're kind of in this symmetrical triangle right now. Actually, that should probably come down here to like there, right? Yeah, that looks a little better. So you can see, right, we're kind of like we spiked up and then we dropped down, but we're, right, and we're bouncing around and we're tightening and then kaboom. Hopefully, I would assume it would break to the upside. Again, we broke down the numbers and what they potentially bring to the table. $62 million market cap, probably worth a little bit more than that, right? I mean, again, not to bash you rocket boys out there, but ASTS, right? Hasn't made $1, finally delivered the satellites that were, 2 years delayed or whatever the heck, and we're still talking about a $4 or $5 billion market cap or whatever it's currently sitting at, right? So that's why something like MBOT, to say a market cap could be 180, $250 million, I mean, that's really not asking for too much. And we know that we're consistently getting positive updates, right? That's why we had the breakout, and now it's hanging out, it's tightening, it's waiting for a potential announcement here mid-May, along with the earnings maybe, or we can even go out to the apex looking like around mid-June potentially, if we don't have that premature break up or down. And you might have to wait till June, which is technically only 60 days away, right? And then you can have your break back up to 2.25 and potentially retest the higher two trend lines here. But I like the tightening that I'm seeing. And we can see also that Microbot Medical price maintained $9 a share by H.C. Wainwright. So that's why, again, $9 a share, we're talking what, roughly like 4.5. And so, and that's what I mean. That would be a market cap of like 280 million, even if the stock gets to $9. That'd be a market cap sub 300 million. And again, right, this is a cardiovascular surgical remote controlled device. I mean, again, you know, if when this thing hits the market, hopefully, if everything moves swimmingly, it's probably going to be massive. And you may turn around again. It might break up and out. All of a sudden, it gets trending on Wall Street bets, and everybody starts climbing in. All of a sudden, institutions start noticing, right? Next thing you know, the stocks are like $18. So, could definitely happen. But I wanted to update you on that price target here. Let's switch over to stock charts quickly. RSI on it, only 55.7 right now. That's on the weekly. You can see it's staying well above the 50-day moving average, staying above the mid-Bollinger Band as well. We had the curl here on the MACD, could potentially, be getting back to crossing to the upside, which again would shoot it back to the kind of low mid 2 range, which as we know would be this fib and a little bit higher. So as of right now, I think it still looks pretty good. I know it jumped up, it was at $1, now it's up $1.80. It's up 80% already. Did I miss it? Again, we know that something like this could be volatile. We can easily drop if markets continue to stay rough, and we could drop back down to the 200-day here at about $1.25. We could retest that. So percentage-wise, it could definitely remain volatile and have some big swings moving forward. In the long term, in my opinion, I do still really like it. That's just me personally. And you can see also, yesterday had a big swing up and down, right at that moving average. And you can see today we dropped down $1.64, moving average $1.68, right? And we bounced and we ended up climbing and closing right at that top Bollinger Band, 179, top Bollinger Band, 179. So that technically is a pretty good sign as well. If we go back again, middle of February, stock was essentially rejecting and staying below the 50-day for almost 2 months straight. And now we're above it and then bounced off of it, right, in the last 2 days. MACD, again, recently crossed to the downside, bang, crossed right back to the upside. And, of course, we had the price target increase today, H.C. Wainwright. So we may even see a premature breakout, believe it or not. We'll see what happens, though. RSI here, 58.5 again on the daily. So not too overextended at all. Let's check the pivot points real quick. Okay, we can see 208. Basically ran up to that, had a rejection, closed right here at 179. Resistance 1. Stock today again broke up above it, came down, closed right at resistance 1, 179. Next stop again should be a break up to 2+, but we'll see now if it wants to reject and stay in the tight symmetrical triangle, or if we're going to see the premature breakout. I do think, again, long term, I really like this one. I mean, personally, again, conservatively, I think $20 price target, right? We said H.C. Wainwright, $9 price target would bring the market cap, we'll call it 300 million. So if I say 20, that's 600 million. That's like 630, 650 million market cap. That's still not excessive for what they're potentially bringing to the table. You understand my point? So we could potentially see something pretty beautiful here. And the float right now, look, 31.6 million shares. That is not as many as you think it is. But good stop right there at the pivot point. Should be gearing up, ready to break through. Again, it could pause. Let me go back. It could pause, right, flatten out and have these slight bounces off the moving average and form that potential ascending triangle, right? So it could cool down and then prepare to break up and out. So a couple of things to keep an eye on. But I did want to speak about Disney as well. So Disney, on the fundamental side, we had news that China has canceled Hollywood. In a headline-grabbing response to Trump's surprise tariff hike, now raised to 125% on Chinese imports, Beijing, all right, someone needs a new keyboard here. The spacebar's not working. Beijing just made its next move, and no, it's not semiconductors or soybeans, it's Hollywood. China's film regulators announced they'll start moderately reducing the number of American films allowed into the country, marking the most symbolic counterpunch yet in the ongoing U.S.-China trade standoff. Now, this is actually a very, very smart move by China, in my opinion, because it does hit us where it hurts the most. In case you haven't been paying attention, we have slowly been kind of shipping our manufacturing jobs and whatnot overseas, and now our greatest export in the U.S. is our entertainment sector. That's why there is so much attention, and there are so many eyes now from the rest of the world on our singers, our actors, our actresses, our athletes, right? We talk about this all the time. LeBron James over there in China, right? That's our biggest export. Beyonce and LeBron James. So to come back and do something like that, hitting the film industry, in my opinion, was actually a very, very smart move by China. Now, we know, well, we should know by now, that Trump talks about the art of the deal, right? And he talks about the leverage, and you've seen it with other countries already, right? He just comes out of left field. He's like, oh, you're going to play hardball? Okay, 50% tariff, right? And then like a day or two later, after they mull it over, they're like, all right, you know what? All right, no tariff. All right, come on, we'll do whatever. We'll do whatever we have to do. Because we know that this is how countries survive. With these trade deals, with these imports and with these exports, and how they take care of their citizens. So that's why right now I do feel like it's all leverage. He bumped up the tariffs. China came back and said, all right, you know what? Screw your films. We don't want any more of your movies. So, we're going to have a little back and forth, right? A little bit of a boxing match. But chances are, I'd say it's probably all going to be settled. The question, the only thing is we just don't know when, right? I mean, it could happen in the next 2-3 days. Could take 3 months. Who knows? But interesting. And, of course, they talk about companies like Warner Brothers. They talk about stocks like Disney dropping. So what does that mean, for investors watching Disney or IMAX? Not much for now. IMAX says it's still expecting a record-breaking year in China. Well, I don't know if they still say that. But make no mistake, it says about box office, high visibility swing with low economic risk. U.S. movies have already faded from China's spotlight, now making up only 5% of its total box office. Yeah, only 5%. Isn't it hilarious how they word this, right? Notice how I always used to tell you, pay attention to the terminology used in a lot of these articles when you read them. Guru Focus. No disrespect to them, but now making up only 5%. And again, when we looked at like earnings from some of our companies that came out over the last couple of months, right? I mean, they would come up shy by 0.2%, 0.5%, 1.2% lower margins than Wall Street expected, and they'd get smacked up 15-20%. So again, I know that maybe they're trying to be optimistic here, but only 5%. Let me tell you something. 5% is a chunk. 5% is a chunk. Hollywood was already getting squeezed. Chinese films dominate local theater, 80% of sales. Even when American movies do get a release, studios only take home about 25% of the earnings, half what they pocket in most other countries. Titles like Thunderbolts are still greenlit for Chinese screens. Glory days of Titanic and Avatar lighting up Beijing are long gone. China has moved on, and so has the financial relevance of the market for most Hollywood studios. But Now, more important than that, you can see I have a couple of trend lines drawn out. I'll get to them in a second, but you can see how we climbed up, got to that fib right there, about 88.93, stock hit 89.01. We rejected right there off the fib, ended up breaking back down, closing below these two trend lines. Now, let me show you these two trend lines. The yellow one here is our more shorter term support, right? This was going back, looks like the first week of October 23, connecting to that next low. Ends up meeting up with that low right there, August 8th, 24, and cutting across. Again, when we had the initial gap down, Disney, I mean, obviously took a big hit like all the rest of the stocks, but you can see it stayed above that support. But then it broke, and it took, again, what, a 2,200, 2,500 point Dow rally to bring the stock back up to the 90s, back above these support trend lines. And then today, we instantly, wait, hold on, let me see something. Closed at 91.44, and we opened at the fib. Okay, we opened at the fib, dropped to 83, came up to 85. In my opinion, it still looks bearish. Not just off the recent China news, but also if we do this. Look at this. Now, we technically had a quick flash break right about here, back in 84. That's 1984 for you young kids. And you can see, though, this may be a very bad sign. This is going back from mid-December 1974, cutting up there, June 84, coming up, touching the low there, early March 2009. So this is basically a 50-year support level. The blue line. The blue line. This is our 50-year support level. And look at what's been happening the last several days. So believe it or not, a lot of people are talking about companies like Restoration Hardware with their furniture and their home furnishings. People are talking about apparel companies, footwear stocks, right? You've seen like Nike taking a hit. Stocks like Under Armour have been swinging like crazy. Look, dropped down to 5. And then when the markets rallied, it spiked back up to like 6.5. And now it's back down to 5. So all of these stocks that are exposed are really swinging drastically. And I have a feeling that Disney is much more exposed than they're like kind of playing it onto right now. Playing it out to be. Excuse me, I can't speak today. But you understand my point. I think they're dealing with a lot of stuff right now. And again, we're talking about the backlash of Snow White. We're talking about, boom, you just lost the Chinese market right now. There was something else. Oh, right, that woman who sued them, right? I could have swore I saw a tweet that there was like a settlement, or or they're going to court or something. I don't know. My apologies, right? I'm talking about it. I'm bringing it up, but I don't even know what I'm talking about. But obviously, we can look into that. But I actually did mention that in the past. But Disney, again, technically, we're back here in the 80s. I mean, we're back down to, haven't seen it since, well, actually, we saw it right there, but again, it was in this big downtrend and then had the big bounce. That was November 23. Look, back here at lows, December 22. And look at this. Technically, wait, hold on. No way. Let me see this. What was the low here? 79.07. 79.07. And we hit what? 80? 80.10. So we came 1 point off of COVID lows. Again, spiked up to the fib. Took a big market rally. And then we opened down here at this fib and immediately broke and came back below these levels. In my opinion, it breaking this potential 50-year support trend line again, this is why, again, I just wanted to mention this to you. because it could bounce around again. If we have some good news, it could try to retrace back up here to the moving average maybe. But in my opinion, I think over the next couple of months, I think Disney seriously takes an even bigger hit than it's taken as of late. So definitely something to keep in mind. Walt Disney. Look, RSI again, clean break on the big drop days on the tariff news initially. Broke it straight below that 30 RSI benchmark and kept it down. And then again, even on the big day here, you can see RSI got just to about 40, and then we had the drop today. It's sitting at 34 and a quarter. But you can see how it looks like it's trending downward. Again, just continuing. So that's why, again, I think that it remains rocky. MACD recently crossed to the downside, gap down, and look, you can see how it dropped, and it almost looks like a bear flag on the MACD, right? Dropped, and you can see a potential curl getting ready to potentially lead to more downside. So this caught my eye, definitely one I wanted to bring to your attention. RSI on the weekly, look, came right down to the 30, had just a slight bounce today, getting up to about 31.5. I feel like it's weak. I feel like even if we look at these volume bars here, I feel like over the last several years, I feel like there are many more sellers than there are buyers, even when they come in. And it seems like when they do buy, it's very quick trades. That's, again, just how I'm personally seeing this. I could be wrong. MACD came up, looks like just about March, going into March, and rejected. We've been dropping ever since. Pivot point here, 88.92. We're at 85. We rejected off that. 83.47. We hit 83.07 and had a slight bump up here. But again, I think if futures are red, markets open red again, I think the stock breaks clean through it. I do think we have a new 52-week low coming soon. I think it retests those sub 80 levels and could potentially see this fib right here of about 70.5, because it did break key technicals. And people always tell me technically it's about the technicals. So technically, but you know, that's just what I'm seeing. Check the Bollinger Bands, I'll let you go. We are straight down here. Yeah, again, could slightly be channeling up, but I'm expecting that rejection even if we get back up. Back down to low 82s, that makes sense to me. Nowhere near the moving averages now, both above 100. We dropped big. Same thing here on the weekly, 101, 50-day moving average, stock's at 85. 88.59 on the bottom fib, which would technically be above both support trend lines, just below the fib. So yeah, actually, yeah, maybe it can open and run up 2-3 points and then reject. I don't know. It's hard to call right now. Again, it changes so much day by day. But key technicals, in my opinion, right? I'm sure you'd agree. And whether you decide to take a position or not, again, it was, you know, something that caught my eye. And I always said, you know, if I didn't have anything to say, I wouldn't say anything. And if I make a video, it's for a reason. So, again, in my eyes, I feel I'm mentioning this for a reason. And I don't know. We'll see if I turn out correct. But yeah, Discord blinks now. Oh, crap. I just hit my DPI button accidentally. Nope. There it is. Okay. Apologies. But yeah, Discord again. Now blinking every time someone sends a message. I can't. I hate change. I really do. But that's it. I'll end it there. Once again, stocks by the numbers. Thanks for stopping by. If you have any questions, comments, or concerns, drop down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That's our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.